Build a $1 million portfolio in your 20s. Smart moves. Welcome back to the channel. Today we're diving into how you can build a $1 million portfolio in your 20s with smart investment strategies. I know what you're thinking. $1 million in my 20s? That's impossible. But trust me, it's not as far-fetched as you might think. With the right approach, a little bit of hustle, and a whole lot of consistency, you can set yourself up for serious financial success. We're going to break down the exact steps you can take to start building your $1 million portfolio, even if you're starting from scratch. Let's get into it. The Foundation High Yield Savings Account. First things first, you need a solid foundation. I'm talking about a high yield savings account. Yeah, I know it's not as exciting as picking stocks or buying real estate, but hear me out. A high-yield savings account is crucial for two main reasons: your emergency fund and short-term savings goals. Your emergency fund is your safety net. It's the money you dip into when unexpected expenses pop up. Think car repairs, medical bills, or if you suddenly lose your job. Having 3 to 6 months of living expenses stashed away in a high-yield savings account can save you from going into debt or derailing your entire financial plan. Plus, while it's sitting there, your money is actually growing, thanks to the power of compound interest. Now I know what you're thinking, Graham, interest rates are tiny right now. What's the point? And yeah, you're right, they're not amazing, but even a small amount of interest is better than nothing. Plus, interest rates fluctuate, so it's always a good idea to have your money in a high-yield account, so you're earning the most you can when those rates do go up. Look for accounts that offer higher APY than traditional banks because every little bit helps. Riding the market wave low-cost index funds. Alright, now that we've got our safety net in place, let's talk about putting your money to work in the stock market. Don't worry, you don't have to be a Wall Street whiz to make smart investments. One of the easiest and most effective ways to build wealth in the stock market is through low-cost index funds. Think of an index fund like a basket of stocks that tracks a specific market index like the S&P 500. Instead of trying to pick individual stocks, which can be risky and time-consuming, you're investing in a diversified portfolio of 500 of the largest U.S. companies. The beauty of index funds is that they offer broad market exposure, which means you're not putting all your eggs in one basket. They're also super low cost with minimal fees eating into your returns. Over the long term, the stock market has historically trended upwards, so investing in low-cost index funds is like riding that wave of growth. You can start small and gradually increase your investments over time. Remember, consistency is key when it comes to index fund investing. The market will have its ups and downs, but don't panic sell when things get volatile. Stay the course, keep investing regularly, and let the power of compound growth work its magic over time. Now let's talk about real estate. No, I'm not saying you need to go out and buy a mansion tomorrow, but incorporating real estate into your portfolio can be a game changer. One of the biggest advantages of real estate is the potential for passive income. If you buy a rental property, you can collect rent from tenants every month, creating a steady stream of cash flow. Plus, real estate tends to appreciate in value over time, especially in desirable locations. Now I get it, buying a rental property can seem daunting, especially in your 20s. It takes a significant amount of capital and comes with responsibilities like property management and dealing with tenants. But don't worry, there are ways to get started in real estate without becoming a landlord overnight. You can explore options like REITs, which are like mutual funds for real estate, or even crowdfunding platforms that allow you to invest in commercial properties with smaller amounts of money. By now you've got a high-yield savings account, you're investing in index funds, and maybe you're even dipping your toes into real estate. That's awesome. But here's the thing. You don't want to put all your eggs in one basket. That's where diversification comes in. Diversification means spreading your investments across different asset classes, sectors, and even geographic regions. Think of it like this. If you invest all your money in one stock and that stock tanks, your entire portfolio takes a hit. But if you have a diversified portfolio with investments in stocks, bonds, real estate, and maybe even some alternative investments like precious metals or crypto, the impact of one bad investment is minimized. Diversification helps to reduce your overall risk and volatility. It's like having a financial safety net that protects you from market swings. The key is to find a balance that aligns with your risk tolerance and financial goals. Don't be afraid to consult with a financial advisor to help you create a diversified portfolio that's right for you. Alright, here's the truth bomb. Building a $1 million portfolio doesn't happen overnight. It takes time, discipline, and a whole lot of patience. The most important thing is to stay consistent with your investments, even when the market is acting crazy. Remember those index funds we talked about? Don't just invest once and forget about it. Make it a habit to invest regularly, whether it's monthly, bi-weekly, or whatever works best for you. The beauty of compound growth is that the earlier you start, the more time your money has to grow exponentially. Think of it like a snowball rolling downhill. It starts small, but as it picks up momentum, it gets bigger and bigger. That's the power of compound growth. So don't get discouraged if you don't see massive returns right away. Stay the course, be patient, and trust the process. The key is to start early, stay consistent, and let the magic of compound growth work its wonders over time. Remember, building a $1 million portfolio in your 20s is possible with the right strategies and mindset. It's about making smart choices, staying consistent, and playing the long game. Don't get caught up in trying to get rich-quick schemes or chasing the latest investment fads. Focus on the fundamentals, building a solid financial foundation, investing in diversified assets, and staying disciplined with your savings and investments. Thanks for watching. And don't forget to like, subscribe, and hit the notification bell for more financial tips.